Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock review video on Micron Technology, ticker symbol MU. This stock analysis video was actually requested by Way Too Easy. He said, I know you don't do growth stocks, but I'd love to hear your take on Micron Technology. And I said, I'll definitely look into it and plan an analysis. Thank you for the suggestion. And I just wanted to show that this was immediately the next video I made after the comment. So if you guys have some stocks that you guys think aren't being covered well enough or don't have any coverage, please let me know. I only ask that they be actually legitimate, good companies that, are not penny stocks or things of that nature. I want real companies to analyze that I can put on this channel and help to service people who are looking for videos on YouTube that they can't find videos for the stock they want, or the videos that they want are very outdated. So let me know if you guys have anything like that and I'll try to cover it. Or if there's just something overwhelmingly that people want to see, I'll cover that stock for you guys. In doing my research for Micron, I wanted to kind of figure out what kind of company it was and make an understanding of what they're involved in. I knew they were somehow involved in semiconductors, but I didn't know the full story. And I think that these key takeaways will help to illustrate what they're involved in. So we have here Micron Technology is a semiconductor company that develops memory and storage solutions. Micron products are used in automobiles, consumer electronics, servers, and computers. Its compute and networking business unit generates the largest share of its revenue. Why is Micron important? Well, memory and storage are essential components in almost every device we use today. Micron is a key supplier in this market, and its products power both everyday technologies like our smartphones and cutting-edge innovations like AI and autonomous vehicles. So they are essentially one of the leaders in memory and storage for devices. There were some interesting things when researching Micron, and one of them was that Micron is one of the few US-based memory manufacturers. And this gives it a strategic importance in global markets, especially in light of US-China tensions, because there's so much kind of dramatic tension between the US and Taiwan, because that's where all of our chips are being manufactured. But Micron seems to be kind of like one of the few exceptions in this. And because of that, Western companies may prefer Micron over competitors like Samsung or XK Hynix for national security and supply chain diversification reasons. So they might be a good long-term play if you think China is going to invade Taiwan. This is kind of a controversial thing that investors don't like, but I think that they probably should like. I mean, I'm assuming some people like it, some people don't. If you're a, stock market analyst or someone who trades for a living and your bonuses are based on your year-to-year performance, you're probably not going to like this news. But with support of the $6.1 billion from the CHIPS grant, Micron plans to invest $50 billion in gross capex for U.S. domestic leading-edge memory manufacturing through 2030. So they're going to build two huge plants to help with their production. And I personally think if you're a long-term investor and you want to hold Micron, you are just loving this. And if you're a really short-term investor, then you hate this because you just want to squeeze the money out now and sell out and buy something else. But if you're actually a long-term, holder, I think this is a really good thing for you. And I think this is just a very safe chip play at this point, despite some, recent free cash flow problems that they have had that we will get into later in the video. I think that this is actually really good news, and you can't beat getting $6.1 billion of money from the government to produce something that's going to help you increase your free cash flow anyways. And the government wins too because they have a, memory producer domestically that's bigger and stronger. So it's a win-win for both sides, and I don't see why people are angry about this capex spending. I understand that free cash flows are going to be smaller in the next, short term, but long term, this is just solidifying Micron, and I think that the sky's the limit for them with this. I think this is a really good thing if you're a long-term investor and you seriously care about the stock and want it to do well. Get into Micron stock performance. So the 1 year performance is actually up 6.06%. The market cap of Micron currently sits at time of recording this video at $97.3 billion. The PE ratio for Micron is 25.4, and the yearly dividend yield is 0.53%. The 52-week low is 79.16, and the 52-week high is 157.54. I also think this yearly gain can be very misleading if we don't talk about the past 6-month performance, because the stock is down 34.14% in the past 6 months, and you can see that from the 52-week low of 79.16 and the 52-week high of 157.54. The stock is way closer to that 52-week low, and I'm also wondering with my valuation, it could be interesting if we look at it and we see that this stock is actually something that's super undervalued and way oversold at this point. Because I think when you look at a lot of stocks in the stock market, just in general, a lot of investors lack patience and they're way too emotional. And this might be a situation where emotions overweigh logic in the price of the stock and the value of Micron technology. Here we have the EPS per share per quarter of Micron. Try saying that 3 times fast. But we have a beat each consecutive quarter, Q2 of 24, Q3 of 24, and Q4 of 24. We also have the analyst recommendations here with, in January, 25 out of 39 rating it a buy and 8 out of 39 rating it a strong buy. And here we have the analyst price targets on the right with the low of 70, the high of 250, and the average of 131.16. And as you can see on the graphic, the current price is 87.38, so that is well below the average. So analysts are seeing a lot of upside to this stock, despite some irritation over negative cash flows in the last 12 months. But it seems like to me, Micron is just investing back into their R&D and CapEx so that they can increase the cash flows in the future. But that's just my first initial look at it. Here's some kind of over dramatization I found, and this is an excerpt from, I believe it was a Yahoo article, but it's also just, I guess, factual, but also kind of inflammatory language. And it says Micron's demanding reinvestments have drained its resources over the last 2 years, putting it in a pinch and limited its ability to return capital to investors. Its free cash flow margin averaged negative 9.8%, meaning it lit $9.83 of cash on fire for every $100 in revenue. Now, my issue with this, and the reason I'm just going to be completely honest with you guys, I am not a super genius that knows a lot about memory. I'm not a software engineer, anything like that. This is not a business I'm super familiar with, but I'm guessing whoever wrote this article isn't super familiar with it either, because my best guess on why they are doing this with their free cash flow is not to light the money on fire, but it is to develop some kind of facilities for higher production or some kind of research and development. Because you also have to take into account with this company that semiconductors are cyclical, meaning that there's high demand in some seasons and low in others. So there's a seasonality to it, and there's also a lot of money that has to go back into R&D, and you also have to acquire the best possible people you can with the most talent to develop these things. Because this kind of stuff, it's almost like nuclear, where there's very few people in the world that can really develop the architecture and all of the different things for chips and if you just take a look at those boards and look at how they're all of the little lines and everything in them, they're very extremely complex, and this business, it does require capex spending from time to time. But once you get things running and once you're producing, you're making a lot of money from these. So I haven't done the free cash flow valuation yet. That's going to be the next segment of the video. But I'm guessing that that's what's happening here. They're putting money back in because they know that for every dollar they put in, they can stretch it out and make more money in the future. And I think that they're playing very safe. I don't know about the actual debt to equity ratio and the financial side of it yet. I haven't analyzed the actual full debt and everything that's going to happen in the free cash flow portion and the weighted average cost of capital. But from the perspective of geopolitical, uh, that kind of perspective, this is a much safer company than something like an Nvidia or AMD that has a lot more business in Taiwan. And I think that in the future, with this new administration, there's probably going to be a lot more money that Micron's going to be making compared to their competitors because they're, producing everything domestically. So I think that Micron's doing the correct long-term plays, but I think that a lot of, you know, these article writers and these people who are graded on a yearly basis or on a short-term basis do not like what Micron is doing because it doesn't give them money now. That's just my kind of, that's not even like entirely factual because I haven't broken everything down yet. But when you see an article or an excerpt like this, that's kind of my first instinct on this, is that the people who want to just come in and milk this company don't like it. And they're not all in line on a long-term approach because they don't really understand the business. That's kind of my gut instinct when I'm reading this, and that's kind of my feeling about the company so far. I think it might be a really good long-term play, and we're going to see when we break everything down. And keep in mind, this is just my opinion. It's not financial advice, but from the research I'm doing, this is kind of the picture that is being painted for me so far. Very quickly, this is my weighted average cost of capital of 6.92%. And these are all the variables that I put in. Everything is in thousands or has been converted to thousands. Total debt of this company looks like it's only 12.58%. And the market cap, the equity in the company is 87.42. And that's a pretty good mix there. At first glance, this looks super bad and this looks super undervalued for what it is. The growth rate, negative 125.92%. The upside at the current price is negative 74.65%. But this is if you're not being objective and you're not looking at it fairly. Because what really has happened is they've spent a lot of money on CapEx, like I said. So if they have, and it's a seasonal kind of business. So if they have a year that we build, even let's say we make 2024 just a forecast of the future. I know this is the trailing 12-month real amount, okay? But obviously companies' values are based off of future cash flows. So if we based it for our number that we project off of each of these, because each of these cash flows below are based off of just this last one right here, which might be something that I need to change in my model going into the future. But if we change this to even equal, let's say, this times 0.85. So the 2022 cash flow times 0.85, then we get a buy rating with a 15% growth rate. And even if we put a 12% here or a 10%, if you think that they can get back to the if they can get back to a similar cash flow consistently to 2022 going into the future, then this might be a buy. But I have to be honest with you guys, and to Too Easy, who suggested this, I think I think it's a good company within the sector, but I think it's kind of outside of my wheelhouse to accurately predict and understand. So I personally would not invest in this stock, but I think that the stock could be very solid. But again, it's difficult to also project what the free cash flow is going to be in an industry that's very difficult to understand if you're not super involved in it. And because this industry is so lucrative, I think there's a lot of analysts that are very involved. I think that this probably has fallen below the fair value, considering just the geopolitical strategies that it has and the potential for huge free cash flow in the future once it gets those plants built. So it's probably something that can grow to an extremely lucrative valuation. Or what you can do here, which, I think could be a very smart play, could be to buy into this when it's performing very poorly, wait for it to bounce back and perform very, very positively, and then sell it off to someone else who's, super hyped on it or super wants to get into it. I think that might be a good strategy as well. If you can get a really good return on this, then sell out a decent percentage and then wait for it to fall again because it's cyclical and people have very short attention spans and they're not going to be able to invest for the long term. So I think that's how you make money on Micron. Thank you guys so much for watching, and a special thank you to Way Too Easy. If any of you guys have different stocks you want me to do an analysis of, please drop a comment down below, and I'll definitely try to get to all of them. And if you guys liked the video and you made it this far, please hit the subscribe button because it helps my channel out a lot, and I really appreciate it. Thank you so much for watching. Have a great day.